Good evening, everybody. Welcome to the Lock in Your Success Trade and Market Update for October 14th, 2012. If you remember last week, or the week before last week, we were pretty bullish on this part of October. But last week we were saying that the charts looked like they were weakening and we were more likely to receive some sort of a pull down. And that's exactly what we got this week. So let's take a look at our SPX chart to start with. We were up in here, and like I said, I expected a much more energetic bounce from this little pullback. With the lack of any real follow through, then we were probably going to drop out, and we did. And we came basically back down to the lows here. So we were sideways to bearish. This week here, we are looking at that we're sitting more or less on horizontal support levels. We are at our 50-day moving average. It is likely that we may get a small bounce. However, we do have some price patterns that we've set up here that we can set down for a downside move if we don't bounce too far back above our resistance level. So we more or less had a double top in here. We broke down slightly below it. Whether you can call this a clear break, yeah, that's kind of negotiable. But if we get a decent bounce off here, then we are back into sideways mode. If we start to pull down from here, we have a nice price pattern where we could come in here and measure our double top and then project it down. And if we were to do that, we're coming to around the 1395 level, which ties in fairly nicely with this lower trend line. So basically, I'm looking at if we continue down, we're probably coming down to, I think 1395 might be a little low, but a little bit closer to this 1400 level. And we'll see if that holds, because we have some nice horizontal support there as well. If we bounce here, we're probably going to go into sideways mode. And when we start looking at our other indices and see what else we have, here's the NDX here. We have some bad data in the charts. I think we closed at the low down here at around 2720 last week. So we have some bad data, but we have a nice clear head and shoulders top pattern here that confirmed. And if we do our price pattern analysis on this, it gives us a price target of about 2675, which again lines up fairly nicely with this lower channel. And we'll be looking for that. Since this has more to go, that gives us evidence that the S&P may continue to fall. As this comes down and starts to reach this reach its price target. If we look at the Dow, we had the same thing. We had a double top that confirmed. We are at a longer term support level, so again we may bounce higher, so there's evidence of that there. However, if this price pattern were to play out, it puts us down at the 13150 level, which is again down close to our lower half of our trend line here. So we do have definitely some signals that we're probably going a little bit further down. Overall, I would say the markets are still bullish. However, short term, unless we get a reversal that pops us back over these support levels that broke, then I would say we're likely to continue to drop a little bit. Again, we have very mixed signals because we are at a nice horizontal support level, which again may overpower it. So where are we going? We have no clear signal. We have mixed signals, which, as I said last week, often results in sideways moves. But if we start getting breaks of these levels, we have price targets, and we know where it's going. If we happen to bounce, then we're likely again to stay in more or less of a sideways mode, and we'd have a price target of these highs, past highs in all our indices. The Russell chart isn't as clear. We don't really have a nice clear topping pattern here, but we do have a topping pattern forming. So we will go with that and say that if we go down, we'll be fishing for our next support levels. I wouldn't be surprised if the markets come down. We know the Russell likes to move a little bit. If they do happen to start breaking these levels, we're probably looking at 800. We're probably looking at a touch of a 200-day moving average if we do break down from here on the rut. If we get our bounce, again, we're looking for highs, previous highs. So that's what I expect for the markets for this week. We're waiting to see what kind of mood investors are in. If we start breaking these levels, I told you the targets. If we do not, we have our upside target. and in general are looking at sideways movement though for the longer term. All right, let's take a look at our positions quickly. As I updated you, I did enter my November M3 position. I got absolutely hammered on guessing market direction. I entered the butterflies without entering the calls. I took a $600 hit on the entry. So not a big deal. We should be able to make it back, especially since the market's coming down. So it's nice that the market's coming down. It makes the trade a little bit easier. The position, despite my really bad entry, is up almost $1,000 in a very short period of time. Had I entered normally, I'd be up 1,600, but or 50 around 1,500. But like I said, I'm not because of this. So that's basically the scoop on this trade. If the market does continue to fall as is more or less expected, we will start rolling these back. Let's take a look at our bearish butterfly for November, which is our only other open trade. Here is that trade here. So far it is going very well. We haven't had to do anything at all to it. Remember, I entered on that blow-off move. I entered a little bit early, which is sometimes a little bit to my detriment because the market was weaker than I thought it was. I thought the market was going to continue up. We were completely wrong. I hit the very top of the market and we've had this pullback. With my larger positions, or if you have a larger position, you can start protecting this by rolling back part of your position if you wanted to. Like I said, we're pretty much trading this one straight by guidelines, with the exception of a slightly early entry this month. And we shall wait to see. If the market continues down, I have a rollback point of 810, where we roll this back to at the money and reset our reference points. But if we never get there, this trade is going to be looking really good if we have a bit of a bounce, be able to pull it off. If I maintain in this 1/3 of a position, and I reach over 20% gain on my planned capital, which will be probably a 80% or plus gain on my invested capital, I'm very likely to just pull this off. I'm very happy to basically put a trade on, sit in it for 30 days, and make 80% of my invested capital. That makes me perfectly happy, and we just move on to December. If the market continues down and we have to start rolling and stuff, then we're going to hold this into 21 days to expiration and probably hit some sort of a reduced profit target more than likely. So both trades are doing very, very well. I'm happy with my November positions. And I don't remember if we closed out the October butterfly last week or the week before, but if I didn't update you on that, that went very well for more than half profit target. So that was a really good trade this month. All right, that's it for now. Enjoy the trading week, and I will keep you updated with any changes. Thank you, and good night.